And this discussion panel is going to be on finding the right direct and co-investment opportunities. So a lot of family offices like to invest with others, many times a lead investor who adds strategic value, maybe someone like Brian, if he's familiar with remittance investments or something of similar nature. And we're going to start out just by going down the line. And why don't we start with you, Russell, and then work our way down with a quick introduction.
Okay, good afternoon. My name is Russell Ballou, and I have the privilege of representing Raymond James Private Institutional Client Group. A lot of words. What we do is we actually very conscientiously curate access to utterly asymmetric opportunities to seize alpha. That's the sentence. Putting in regular English, we help folks find those truly exceptional investments for institutional clients that have at least $50 million, those truly exceptional investments that outperform. My job is to find them all over the world.
Great, thank you.
Our biggest concentration is in Arizona Mountain Vineyards, where we're basically facilitating the transfer of assets, vineyards from California over to Arizona, where we're using new laws of distribution, which are that state by state you can now self-distribute, allowing us to go vertical, where we can net over $30 a bottle by comparison to the old models. Basically focusing on two things. One is that the laws in California only allow you to have one wine tasting room, where 40 other states have now opened that up to where you can open as many as you need. That's the first thing. And the second thing is that very few companies sell for 20 plus times earnings. The wine business has always done that. It's very hard in anything but manufacturing to get that type of a multiple. So we're concentrating on the resale of the vineyards for our shareholders.
Great, thank you.
Aloha. We invest in technology companies. We've invested in 130 companies to date, all early stage, much like the space that Brian plays in, as you just heard him. And many of which are from Hawaii, but also some from out of state. And Hawaii Angels is a local angel group that I've been involved in from its inception in 2001, dare I say. So been an angel investor for a long time as well.
Great, thank you.
And I'm originally from California. I spent 20 years in Silicon Valley, starting off as an engineer and moving to marketing for a lot of reasons, most of it at Intel. And then in about 1999, I said, this 20 years is long enough to work. Maybe I'll just take a year off and smell the orchids. And this is a great place to have smell orchids. Well, 25 years later, I haven't really gone back to work, and I've enjoyed the retirement. And about 2006 or 7, I found Hawaii Angels and Shanoa and I became friends and joined the board for Hawaii Angels. I've done about 80 individual angel investments, 50 in Israel, about 30 in Hawaii, and the rest in the mainland.
Great. And then Cliff, why don't we start with you and go down the line of the number one thing you'd like to source from the room in terms of a very particular type of deal, like maybe fintech or something in manufacturing or robotics, and then we can go down the line.
I think I'm most interested in tourism tech. I think it's one area Hawaii has a competitive advantage, and for a variety of reasons. Two most important then is obviously we've got a large market for tourism. And the second reason is that Hawaii is considered international by a lot of corporate, the Marriotts and the Hiltons of the world, but domestic by an equal number. So you can actually sort of bootstrap an Hawaii company to go both international and domestic. So that's probably my number one interest.
Great.
So just to echo that, travel and tourism is a space that we're interested in as well at Blue Startups. And in addition to that, we invest in companies primarily in the B2B SaaS space, and specifically sustainability related solutions. So circular economy, somebody mentioned that earlier. That's a space we're very interested in. And as well as gaming. My business partners are the owners of the Tetris company. So for those of you who are familiar with the video game Tetris, anyone?
Yes.
Yeah, it's pretty well known. It's actually headquartered right here in Honolulu. So a little known fact.
Great. Tom?
In our family trust, we keep 90% of the money in very conservative investments, and we put about 5% into cash flowing expansion companies and 5% into startups. So we're always looking for the one that checks all the boxes, everything that everybody's been saying today about what you need in passion and CEOs and operators is always important. We consider all those things, but we're looking for ones that check all of those boxes. Not necessarily the biggest winner, but the one who checks the boxes.
Great.
When you think of Raymond James, how many of you are aware that last year J.D. Powers picked Raymond James as the number one advised wealth management company? Did you know that? Okay. We're very conscientious. And if you think of the firms that we compete with, we're one of the only ones where the founder is still around and has a keen interest in what we do. So if you're saying to me, hey, Russell, I'd like Raymond James to consider us in their platform, the first thing we do is to actually look at and underwrite the opportunity to see whether it would be a good fit for our clients, which are ultra high net worth institutional types. We like late stage growth companies where there's some visibility to an exit, either through a strategic or an IPO. But we will also consider things that are asymmetric in the sense that they will sit in a portfolio and be a true source of diversification. Allow me to expand on that for just a moment. A family office approached us and said, hey, we have an utterly uncorrelated asset. It's IP, specific music IP. And so we said, oh, that's interesting. And they said, by the way, this music IP, which includes things like Fleetwood Mac, the Rolling Stones, you own that, and it generates 8.5% tax-free. That is a value-adding investment that we can offer to our clients. That's an example of some of the things we do.
Sure. Great. Brian ended his last talk talking about how he goes on podcasts, he speaks on stage. That wasn't natural to him. And he gets access to great investments because he puts himself out there in multiple different formats. And that's how he gets access to really great deals sometimes. So I'm curious, for you and your teams, what are your best deal origination strategies? Where do you get your best deals besides, speaking on a panel like this today? Do you do anything to get better access to deal flow?
Yeah, I'd like to address that. So as you see me here overdressed, it's not a fit for what I actually do. I am a farmer. I'm a farmer. And what I grow are unicorns, okay? And there are two ways to grow unicorns. One of them is to go and actually set up an ecosystem. So at Raymond James, what we do is we go out to folks that have a pattern, a track record of cultivating capabilities for founders to actually excel. Not just that they actually start a company, but they see it through to its exit. So that's one source. The other is family offices. The example I just gave to you. Here's what I'd like to have you consider. Suppose you have something really that's exceptional or very interesting, and you need 50 million, and you already have 30 million. You're trying to come up with the last 20. If it is interesting and asymmetric, we're interested. So come see me.
Thank you. Anyone else want to comment on deal origination?
I've my whole life has been investments in different areas, .coms, plastic, PVC fence manufacturing, sports technologies, medical, a number of things. What I do for deal flow is what we're doing here, getting to know people and people I trust. I never want to invest in any deal where I don't trust the individuals that are running it and can carry it to the finish.
Great. Makes sense.
Yeah, echo that. We really rely on a network effect for Blue Startups. We have a huge network at this point. We've been in the game for 12 years. So we have hundreds of founders, alumni companies, 250 mentors, 400 investors. These are all the people that we rely on for referrals. And all of our, of course, best deals come from referrals. We get about 600 applications for every session, and we take about 10 companies. So it's very competitive, and we need that deal flow. I'd want it to be even more. 6,000 would be great.
Right.
Yeah.
I think a lot of people that have had a recent exit or just started making enough money to invest, sometimes we'll see 3 or 5 deals in a year, and then they'll pick 1 or 2 to invest in, especially after someone has a big exit. Everybody comes to them who knows them best and asks for money. And then there's investing with who knows them maybe versus what's good investment. So we see that over and over again. And if you've just had one pineapple and it's not fresh, then you don't know if that was a good pineapple. If you've looked at 300 or 6,000, you can be a pretty good judge, even if 5 years ago you had never tasted one, right? So I think that's really critical for investors here in the room to hear. Do any of you negotiate special terms because you're going to give somebody access to a strategic door that's going to open, or distribution, or you're going to put in 25% of all the money they need? So you negotiate that valuation way down. I know Brian brought that up. Family offices bring that up. Do any of you have a special strategy or approach to doing that?
When investing it depends on the stage of the company. So when you're investing in a startup where he's checked all the boxes, but there's still one question, he hasn't done it before or whatever, then we control the board until they pay us back. We set it up with a convertible note or something like that, where if they begin to fail, we can bring in a team and save them. That's one. And I learned a trick from GE Capital a long time ago, and Auto Bytel was the first .com company that went public. I was the president of that company, and they taught me how to make one investment at one price and make a second one, 6 months down the road at another price, which quadrupled their first one. And so we do like to divide up the placements, not only to protect ourselves in the first and second round, but to also increase the value of our first investment.
Right. Great point. Yeah.
So the prior speaker talked about the paramount importance of relationships. When you think about where you might adjust your terms, yeah, of course we will consider it, but it's not about the price. It's more about 2 things. One, will this further the relationship? Are we bringing a partner to help us grow the farm? Are they bringing a special fertilizer, a special distribution? If they are bringing that, we'll consider it. The other place that we'll consider it is underwriting. Richard just talked about how when you're wealthy, people approach you and then you get seduced into making some investments that you may not necessarily completely understand. We really like to have our clients understand not only what they're doing with us, but how it fits with their overall portfolio. I'll say that again. It's the financial advisor coming out of me. We want people to understand how this will work for them in terms of not only their family now, but their legacy. I say this to say that if we have a person bringing to us increased underwriting capacity, that is, it's a family office and they have deep knowledge of a particular sector that we don't have, that's valuable. And that we want to price in and give them an accommodation for.
Yeah, I would say a lot of families we worked with will have like the step in control, and you're talking about, Tom, on like be able to come in if things go wrong and they don't get fixed, then okay, you need to be able to fix it to save your own money, essentially, if you're putting a lot in. Or they ask for collateral, it could be IP, could be real estate, etc. Or many times if you go and you can get 20% of the capital you're raising from someone who made all their money in that niche for 30 years, then the rest of the money will come in quickly and they're strategically helpful. So it's worth, having a better valuation. But what's been your experience, Cliff, in terms of negotiating special?
Yeah, I was going to chime in with, one of the disadvantages of being an angel investor is you are almost always a deal taker, not a maker. But the advantage of being a member of a angel group is that we recently, this year actually, led a round for a sizable amount of money, at least for us, with a Utah irrigation company, where we ended up with board seats and favorable terms. So the benefits of collective money obviously go a long way.
Right.
Yeah, I mean, we're a very different animal as well, because we're, at Blue Startups, a venture accelerator. So we do always have special terms. We are not just an investor, right? We're providing a lot of value, 12-week program. It's like an MBA on steroids. So, but that's always a battle with the entrepreneur. It can be hard to explain. And then, well, I got this investor in at this term, so you should come in at the same terms, which we can never do. It wouldn't make sense for us to do that. We're not just providing cash. We're providing cash plus a lot of service and access to network. So that is something that we are constantly negotiating, and we have a whole bunch of docs and special terms that create a little bit of friction, to be honest, but
Sure.
we have to do it.
Sure, makes sense. If you are a founder, raising capital, developing real estate, or you're an investor, would love for you to get involved in the Family Office Club. I've run this community for 18 years now. We've hosted 300 live events. We have 17 million social media group members and followers. We have the #1 YouTube channel on family offices. We have the #1 most popular podcast on family offices. You can learn more about us and our membership options at familyoffices.com. We have 30 in-person events planned in 2026 and another dozen events this year. Please go to familyoffices.com to learn more.